Hello, as you know, I'm Becca Pitts, and today I have with me Rebecca Rainsberger, and she's with Longbridge Financial, and we're going to talk about reverse mortgage. What it is, what it isn't, the good, the bad, and the ugly. Or is it ugly? So let's just start off with simple. What is a reverse mortgage?
Oh my gosh, it's a mortgage without any payments.
Okay, well that seems odd.
Yes, and it did exist in the 60s, 70s, and 80s. And it wasn't a government loan. It is an FHA loan now.
Okay.
But it wasn't a one back then. And it was a big ripoff. It's got a really bad name.
Okay.
When FHA, Federal Housing Administration, through HUD, Housing Urban Development, decided watching these seniors, and it was back then it was 62 and older, it still is, but it was a loan way back then when people would be somewhat talked about investing in annuity investments. You can't touch it for 15 years. And if you do, it's going to cost you a fee. And they were saying use a reverse mortgage, get equity out of your house to make this investment, get rid of your mortgage and maybe invest in this, and this will help you in retirement. But they didn't tell you that if you ever owed more with your reverse mortgage than your house was worth, you have to move out.
Okay.
You lose your house. I mean, what's the worst thing that could happen to a senior?
That's awful.
When they're 85 and their house, they owed more at that time than their house was worth. They got kicked out. And it was like the exact opposite of what people thought. And it was a ripoff. It was terrible.
That sounds terrible. That sounds like an awful ripoff.
It was awful. So FHA and HUD decided to really look at something about housing, basically, and loans, and they decided to create something. It took them about 8 years to get it all said and done and to get it signed off by Ronald Reagan in 1989.
Okay.
So it became a legal loan, and they did not want the name reverse mortgage.
Because it had the
Because it
bad
wasn't. It was not.
Okay.
It was different. What made it different was that it was a non-recourse loan, and with that title, we say it all the time, but what it means is you never owe more than your house is worth. If you could live in your house for 10 years past the time of your home value getting any money back, it doesn't matter. You're not asked to move out or anything. It's your house.
Uh-huh.
You own the house, you're on title. The company doesn't own that house. That's the biggest myth. And that way, seniors, even if they live till they're 113, let's say, and they got the loan a long time ago. Just say somebody lived a long time and they owed more than their house was worth. So what happens at the end when they say they passed away, the heirs would not have to pay a dime.
Okay.
The house would not be theirs either.
Right, because all of the equity had been used up while parents were living there.
Yeah, and in the meantime, the lender won't get all their money back. So it is a chancy thing for the lender. Not the borrower.
So that is substantially different from how it started.
Yes.
But how it started is how it got the
bad
name, and we're still trying to overcome the
Yeah, so I don't use that name of the loan legally. When people are doing with the legal name, it doesn't say reverse mortgage on that deed, on that loan. It says home equity conversion mortgage. That's what FHA called their loan. They didn't want to say reverse mortgage FHA style or something.
Right. But that's quite a mouthful, so we still use the older
Yes.
term of reverse mortgage.
It's just so different in the largest way possible that you kind of say, please let me just explain it. The number one, it's a government loan. It wasn't before. And it's non-recourse. You never owe more than your house is worth. Another element happened that didn't happen before. People can refinance the reverse. You were starting a loan at say 5.7%, and all of a sudden, about 4 years later, 5 years later, it's down into the 3s or 4s.
Yeah.
You could refinance to get a lower rate.
it's just like a traditional mortgage that you have the flexibility to change. If your financial circumstances change, you can change your mortgage. Okay.
Yes, and sometimes people have used all the money right away. There's different ways to have money in a reverse mortgage. It's not just, here's a chunk of money, call me when you're done. That's a fixed rate, and that's when people get all the money up front. There are variable, adjustable rates, and some people really like the options with that because they don't need all the money. They might only need their mortgage paid off. It's a mandatory thing. If they have an existing mortgage or a HELOC, we have to pay it off. So they don't have a mortgage payment anymore, to them or to us. But still needed money for home repairs. A new roof is a popular one. Let's just say they just needed like $30,000 or $45,000 or something. But they kind of like the thought of having all this other money there if they need it.
It's a backup plan. It's a just in case plan. It's
the possibility of having that little, we call it a line of credit, money they also can pull from. And the cool thing about that is it grows like a piggy bank. It's like a savings account.
Because your equity in your home isn't going to stop just because you have a mortgage on it, whether it's traditional or reverse. Your home ideally is going to continue to increase in value.
Yeah, and this is a little different than the rate the home value grows. It would depend on everyone. Is different what the rate is that week or whatever when I sign someone, but say right now the rates are a little higher and it's a 6.8, not the rate, but the growth of that line of credit. That doesn't fluctuate. If you're there with a 6.8 growth rate of that money in the line of credit, it's staying there.
Oh, interesting.
Even if
I didn't realize
the home value went down to 4% growth and then up to about 4.5. That doesn't affect
whatever is determined at the time that the loan is created is the growth rate.
Yeah, we call it a line of credit growth rate, and it's different from the interest rate on the loan, but it's a guaranteed growth. So that's the little window of going, oh my gosh, I'm growing. Look at this money; it's growing that much every year. But the cool thing is they love that, and if they don't use it, if they only use a little bit of it, whatever, they're not charged that.
Yeah, so you don't use it when you use it. Okay, so similar to like a HELOC.
Yeah, it goes back into their equity.
Who typically uses a reverse mortgage?
There's no, I don't know.
And I'm just going to call it a reverse mortgage just because it's easy.
Yes, it's stuck in your brain.
It is.
I'd say a lot of them have a mortgage payment that they're uncomfortable paying. It might be because they stopped working or they lost their loved one. And sometimes people have a Social Security income. With 2 people, it was fine. They didn't have to have any other investments. But some people have 3 or 4 investments or retirement funds, and it's still losing that one person. Sometimes they don't get their spouse's pension.
It just changes the balance of their financial situation.
That's about a third of my clients. Only about a third.
Okay. Have had a change in their financial income.
Yeah. Or the mortgage payment itself is difficult, whether it's a change or not. I have another chunk of people wanting to upgrade their home for different reasons. Sometimes their spouse or they can't go up and down the stairs, and they're in a 2-story house, and they want to share a lift, and they want to convert the downstairs to maybe their primary.
They want to be able to age in place, and they want to use the equity in their home to convert it so they can continue to live there safely in a healthy environment.
And they know their neighbors.
For
they
sure.
love their neighbors.
Yeah.
Some people are just more of a, I'd rather stay here than move into a community.
Well,
or
in addition to upgrading or modifying their home for aging in place, they could also afford help to come in for
in-home care.
In-home care.
That's how I learned about this. I was working in in-home care before I did this, and I saw clients of ours doing reverse mortgage to help pay for the care. And it wasn't initially, it was more people had an in-home caregiver maybe 3 times a week, and as they aged, they needed more care. And they loved the caregiver, they had this great routine, but they really needed more like 5 days a week instead of 2 or 3.
Right.
So those people That's how I learned about reverse.
It's fantastic because a lot of people otherwise they would sell the home to go to a retirement community of some sort. So why not stay in the home and use the equity, because you're using the equity of the home one way or the other, selling it or keeping it, being able to stay in the home that you know and love and where all your memories and your family traditions are, and still get the help that you need at home in a safe environment.
Yeah, that's a really another about a third of them. I had people take a chunk of money for only a term, meaning the loan, if they were taking a monthly income for say 8 years, even though the loan, 8 years later, if they don't sell, the loan still isn't due till they permanently don't live there anymore. So this option was with a monthly income. And instead of for life, which is another option, they could be 110 and they got $800 a month, whatever, and that's what they qualify for. It's for life. They could be 110 years old and still get that, no matter what happens to the equity in their home. Okay. This was a term where they just knew we're going to sell when we turn this age because we're going to go live by our grandchildren. But in the meantime, we want to continue to go to Vegas every month.
Every month? I was thinking you were going to say every year. Every month, okay.
I'm not lying. And so they were getting a chunk of money every month and this is a waterfront property, gorgeous house, beautiful house. But that's what they wanted. They lost some money in their stocks and they just thought, we want to keep this because we know we're going to make plenty of money when we sell this house.
Right, they're going to cash it out eventually in the next 5-10 years, whatever their plan was.
It was 8 years, yeah.
So they just wanted to use the equity that they would get later. They want it now.
Yeah, so they wanted to keep their routine of once a month they go to Vegas. This gentleman lived in a big old house out in Burley, and he did the reverse to give his son, he took the chunk of money up front. And he was fine. He didn't have a mortgage even. He just did it, took this chunk of money up front and gave it to his son. He goes, here's your inheritance now. Because his son was trying to buy a new house or buy his first house. So his dad gave him a down payment.
Wow.
A down payment, a really large down payment. It was like over $250,000, maybe $300,000 he qualified for, and that's what he got, and he gave it to his son.
Because again, his son eventually was going to get it, but right now he needed the money.
Yeah.
And he had the option to do it.
This one gal, she was about 90, quick as a whip, but she had a caregiver because she needed a person to drive. She couldn't drive anymore. And she had a caregiver twice a week to take her grocery shopping, go to the hair salon, stuff like that. And we got the loan for mainly to have the caregiver for more, but there was quite a bit more money available. So she took enough money because she's never been on a plane and never been on a boat in her life.
Okay.
So she took 18 grandchildren and her caregiver on a cruise in Mexico. So she flew 18 people on a plane. You had to fly down to Mexico to get on the boat, on the cruise, and they went on a 7-day cruise. So she goes,
can use it for anything.
Here's my inheritance, because she thought that's something they would really remember from grandma.
Absolutely, and she got to check off some things on her own bucket list.
And the caregiver was with her the whole time, so the caregiver watched her.
So she was safe.
The grandchildren could go swimming, playing, whatever, go off the boat, do whatever.
That's incredible.
So there is extremes. Sometimes it's repairs. They need a new roof, and also they needed the stairs fixed and the ramp or things like that. And that's really another one because they do not want to leave that house.
Right. Who is eligible for a reverse mortgage?
Oh, good question. 62 is the main point. The youngest, if you're married and you're 62 and your spouse is 72, the 62-year-old, the loan is based on your age. Because the older you are, the more money you get.
Okay.
Yeah. So it's kind of, they like hearing that. It's 62, and then whatever the interest rate is and whatever your home is appraised at.
So what if one spouse is 62 or 63 or older and the other is still in their 50s? Can they still get it?
Yep. It's based on the younger person, the 52-year-old,
Okay.
even though they're considered an eligible non-borrowing spouse. Some people worry about their kids' inheritance. And I think I'm using, probably pretty much what I probably would have left for some of them, or there won't be as much in the inheritance now that I'm doing this. But now, there's a preserve loan, and they preserve anywhere between 20 to 30% of what they qualify for that can't be touched.
Interesting.
So it's a guarantee that this is the amount you would receive.
I can see that being a pushback for some. The adult kids don't necessarily want mom and dad to do a reverse because
they want that inheritance.
So are there qualifications for the house itself?
Yes, we cover almost every house, including manufactured.
On its own land, I assume.
Yeah, you have to own the dirt. It's on. They have to own the house, whether it's a townhouse, a condo. Condos, most of them have to be FHA approved, but we can do single unit approvals too. And then single family residence, duplexes. Yeah, they're all there. The FHA appraiser that comes to do their job there, they're looking for a healthy house. They find dry rot, mold, chipped paint, leaky roof.
So it's going to be the same type of an appraiser that's going to be looking at a home purchase or a refi, but it's just this is a refi. So they're looking for those health and safety things that any appraiser is going to be looking for.
Pretty much.
And so those things have to be remedied prior to.
Most, yes. Some of them have. We can do a repair set aside when there's some things that they need the money, but it's pouring rain in Washington. You can't
put a roof on, or you can't.
Right. So those things we can adjust.
Almost like a escrow holdback or something.
Yeah,
like that.
we call it a repair set aside.
Okay.
So we set aside a certain amount. We can still fund the loan with a certain amount that's guaranteed done within 6 months.
So when the weather or whatever the reason is no longer a problem, then that money is set aside to make that repair.
Yes.
What happens when the last owner that's on the loan, what happens if they pass away or they need to move out? How does the repayment work?
What happens is they say the loan is due right away, but most people can never deal with it right away.
Of course, you're potentially dealing with a death. You might be dealing with mom and dad going to a different facility, but it's a hard time no matter what.
Right. Yeah, so all they have to do is they have to talk to FHA and the lender saying, I don't know what I'm going to do. My mom just died. I don't know if I'm going to sell. I don't know yet. And I have to clean this. I don't live nearby. I have to get some people to do it. So I need at least a 3-month extension. And they will go, okay, HUD will allow 3 months. And when those 3 months are almost over and they're like, oh no, I don't know what I'm going to do. I need another 3 months. They make the phone call and say,
so communication is key.
And you can get up to 9 months.
Okay. That seems really reasonable. That seems really reasonable. Just take some time and then call and make the communication and let them know what the plan is.
Yes.
And if that plan doesn't necessarily come to fruition, then make a new plan and call them and let them know what the new plan is. Okay. So there's no payment due on the mortgage, but are there any other things that the homeowner still needs to be responsible for? I assume that they have to keep the home in good repair and they taxes.
Yes, good question. They can either have the home insurance and property tax put into the loan, but most people don't. Most people would rather just do those themselves and remember
rather than having a prepayment on the funds available.
Yeah, but we can do it. The other point is the house has to maintain itself, meaning, well, you've got home insurance. Something breaks, call your home insurance, get a new water heater, new furnace, whatever. That's important. FHA's guidelines is you have to maintain, not upgrade. Just if your roof is leaking, get it fixed. Any
normal stuff.
Simple, very simple. Yeah.
Are there any other stipulations? For example, can you own other property while you're having a reverse mortgage?
Yes, good question. As long as she's in her house 51% of the year, and it doesn't have to be consecutively.
Okay, so you can still snowboard, you can still vacation, you can still go visit grandkids and everything as long as this is where your tax address is. This is your primary location.
Yes. Watch your mail because the anniversary of your loan, every year you get a postcard and they want you to write something back to send it.
You have to RSVP.
Exactly. And that just shows you're still living there. So when
You're
people
still receiving your
throw
mail.
in the trash,
Yeah.
you're going to be, obviously
The loan
not
is
living
due.
there.
If not living there, the loan is due.
then they have
So
to
that's
like,
important
"No,
to
I'm doing
communicate, because we're back on the communication.
Yeah.
If you have someone helping you with your home while you're on vacation,
Yes.
make sure they don't throw away junk mail that they
Yes.
don't know for sure is junk mail.
Yes. Yeah, and it's calling the service center every now and then, maybe just to, ask a question, just say, yeah, I'm still here. But it's really simple. It's all they're asking.
Yeah,
It just
that
wants
seems
you
simple.
to
So
return a
you
postcard.
pay your taxes, you pay your insurance, you maintain
Mhm.
your home, and you respond to the postcard. That's pretty easy. When it is time to sell the home, what if the home is no longer worth the value of what is owed on it? How does you said that it's not possible to pay more. How is that possible?
Yeah,
What happens?
what would happen is the FHA appraiser that did the examination of the house or the appraisal of the house would communicate with the lender, because we still would be the lender and FHA would be involved, showing this is what we're finding. So
For the current value, when it's time to sell. Okay.
And that's all they do. They do the normal FHA appraisal, and then they write off also if there's any repairs needing to. They kind of put that in there. But if it is less, the appraised value is less than what we owe, they can walk away.
So they still need to sell it, or they don't need to sell it.
They can say, FHA, you sell it. Bye.
Okay, so if there's value that the heirs can gain, they can take it upon themselves to sell it and pay off the loan and retain the proceeds.
Yes.
If they find that there is no value, then they can, all done, and mom and dad or whomever has lived in it for 10 years for free, and it's below value, and now the lender deals with it, and that's something that the lender is taking, the risk that they're taking upon themselves.
Yeah.
You have given us so much information. I love this. Thank you so much. One wrap-up question. What is maybe the one thing that you wish people understood different or clearer or better?
Yes. The number one is we do not own the house. We, the lender. And the older you are, the more money you qualify for.
There's such a difference from how it started to what it is now. There's still a bad stigma, but it really, we need to stop that stigma, because it's a great tool. It's not for everyone, but no tool is for everyone.
Right.
So this is a great tool for if it works for you. It's fantastic.
Yeah.
So thank you for helping me clear up some misconceptions, and hopefully we can educate, and if this is an option for you, I hope it's a great one.
Yeah.